Good morning, traders. Richard and a quick Ichimoku cloud chart market review as well as artificial intelligence trading review of the QQQ ETF. Now, the AI we're using is the Fulgent AI engine that sits on the Metastock platform. And you train it to trade the ETF specifically. Here's an ETF AI that I've traded on the Spider and QQQ ETF. And we can see the major market reversal signal is on average 87% accurate over the 10-year period. Swing trades are 85% accurate on average, with average profit per trade of about 10%. That's now over thousands of trades over the last 10 to 15 years while using developing the AI on top of the price action. Volatility breakout, that happens quite often. That's 53% accurate, but nevertheless still above 50% accuracy. And then the quick move is a very high frequency quick intraday trading strategy. That's 71% accurate on average. So the AI is on average 58% accurate, 1.7% average profit per trade over the 10 to 15 year testing period. So it's really very high probability of success using artificial intelligence. Now, we had quite a strong correction, roughly about 12.6% correction in the ETF. We then got to a cluster of cloud chart support levels here. We can see where that support zone comes from. If we look back, let me zoom out, that'll be much better. I actually need to be on the daily chart. There we go. Let's go the daily chart. There we go. Now we can see where that support zone comes from. We can see when we get a market correction like we've had here, we look at the downside support targets. And these are areas where you can either cover your short when you sell the market because it's slicing through the bottom end of the Ichimoku cloud. That enters bear market territory. We then look at swing trade rebounds from these critical cloud chart support levels. And after a 13% correction, these are high probability trade setups that are 3 points to look for. One is the cloud chart support zone. The other one is look for the Fibonacci exponential moving average support zone, 377. It's also within that cluster. And then we got a beautiful volatility breakout trade, and it captured most of that move to the upside. The secondary Ichimoku cloud chart signals in and around these volatility breakout signals there are, one is the turning line cross, and then a rebound from the turning line, and then the standard line cross, and then a rebound from the standard line. So there's a couple of trades within that price action there as well to look at. So if you're a very aggressive trader, you'll be trading these volatility breakouts as well as the Ichimoku cloud chart buy signals to the upside. We then had a very strong rally, had a weak cloud chart buy signal below the cloud chart cross buy signal, and all the way up. And then we now be very extended from the top end of the cloud. So there is a risk of a consolidation now that we've managed to break past this zone there. So I've got a 2% trailing stop at this level, 363.68 roughly, and that's the trailing stop for all these Ichimoku cloud chart and volatility breakout trades on the daily chart. Now let's go and take a look at the 4-hour Ichimoku cloud. You can see over the last couple of months we had quite a lot of aggressive volatility breakout trades, most of them profitable, apart from a few that got stopped out there. But so far so good. Using the AI to trade the QQQ on an intraday basis works well as well. And here we can see on the 4-hour, once again, that cluster of volatility breakout trades here, the cloud chart rebound there, cloud chart buy signal there as well, cloud chart cross buy signal on the 4-hour one. As it crosses the cloud, we're back in bullish territory, and then a very steep move higher. So once again, the trailing stop at this zone is 363, a 2% downside risk on the basis of that. Now we can see a technical retracement of this move, waiting for the turning line is quite extended there for the standard line to catch up to around about the top end of the Ichimoku cloud. So keep a close eye out on that. This top end cloud chart zone there is a critical support zone, comes from that zone there as well as the top end of the front of the cloud. So these are downside risk targets if we start to see a consolidation in and around these old highs to the upside. And now for the 60-minute trader there, fantastic moves here. You can see lots of volatility breakout signals here. Then we got a cloud chart buy signal, cloud chart cross buy signal, the cloud chart rebound buy there, put together with a volatility breakout signal, another volatility breakout signal there, and off to the races. And you can see the AI puts a volatility adjusted trailing stop all the way up into the chart, and eventually it got out of that point there, and there was another volatility breakout signal there, but we've got a 1.71% trailing stop there, because there is downside risk. It could hit the cloud here, as well as in a weaker market hit and test the bottom end of the front end of the Ichimoku cloud. So you can see it's quite useful incorporating artificial intelligence together with Ichimoku clouds to trade the Nasdaq Invesco QQQ ETF. Now just be aware that when you trade the ETF here, just be aware of the weighting, so you have an idea as to what the news flow of the large cap stocks that make up a big chunk of the index. Nvidia 8.6%, Apple 7.6%, Microsoft 5, Amazon 4, Tesla 3, Meta 3.6, Walmart, etc., etc. So keep that in mind, that any kind of news flow would affect these stocks to the upside or downside. But so far so good. It's really been great using artificial intelligence to trade the QQQ ETF, and you can use options as well in and around these signals, and that will really boost your profits. Thank you for watching. Until next time, happy cloud chart and AI trading. Bye for now.